Welcome to this week's Financial Flash. I'm Paul Tickey, and today I'll be sharing the key takeaways from our 8th annual Market and Economic Outlook panel that was held on February 6th, 2025. In this session, we gathered some of the sharpest minds from JP Morgan Asset Management, PGIM Investments, First Trust, and MFS Investment Management. Together, we explored what happened in 2024 and what to watch for in 2025. Let's dive into some of the most important insights. First, let's talk about what we learned from 2024. The market performed remarkably well, with U.S. equity markets leading the charge. The S&P 500 was up 25%, and the NASDAQ rose nearly 30%. Even international markets participated, with global stocks rising about 5.5%. Bonds also delivered positive returns, although they were relatively modest at 1.3%. But here's the catch. This market rally was not broad-based. It was highly concentrated, driven primarily by a group of large-cap stocks we've been calling the Magnificent Seven. What's surprising is that only 28% of companies in the S&P 500 outperformed the index, meaning the majority of the market lagged behind the top players. We also saw a shift in monetary policy. The Federal Reserve held off on making big moves for most of 2024, but in the last quarter, they delivered 3 rate cuts, signaling a shift in their focus from controlling inflation to supporting growth. Inflation ended the year at around 2.9%, but the big question for 2025 is whether the Fed will need to tighten again, or continue cutting rates if unemployment starts to rise. Consumer confidence has shown signs of life, thanks to slowing inflation and a strong labor market, and recession signals seem to have subsided for now. So what does 2025 hold for us? Our panelists were cautiously optimistic. Most expect positive GDP growth, though the pace will depend heavily on policy decisions from the new administration. Growth estimates ranged from 0.5% to 2.5%. But one outlier on the panel did say his firm thought a recession was probable in 2025, leading to an end-of-year growth that is negative 0.5% to negative 1%. Inflation, however, may remain sticky, staying in the 2.5% to 3% range due to policy pressures, including tariffs. Interest rates are also in focus. The Fed is expected to cut rates 1 or 2 more times this year. The panel agreed that long-term rates will likely remain elevated for a while. Good news for the bond investors who are finally seeing higher yields and the potential for price appreciation. But it may keep the equity markets in check. As for the markets, expect a bumpy ride. Our panelists forecast moderate gains for the S&P 500 in the range of 5 to 7%. Importantly, returns are expected to be more evenly distributed across sectors, unlike the highly concentrated performance of the last 2 years. Alternative investments, such as real assets and private markets, are also gaining traction and becoming more accessible to a broader group of investors. Of course, no outlook would be complete without discussing risks. Here are a few the panel highlighted. Market concentration remains a concern, leaving markets vulnerable to shocks. The new administration's policies, particularly around trade and spending cuts, could create inflationary pressures. And finally, there's always a risk that the Fed could overshoot with its policy adjustments, either cutting rates too aggressively or being forced to tighten again if inflation reaccelerates. One audience member asked about the impact of a black swan event, such as a bird flu outbreak. The panelists agreed that it's these kind of unpredictable events that can have the greatest impact on the markets. In fact, the new administration has about 9 months to push its agenda before midterm elections become a distraction. So, there you have it. 2024 was a strong year for the markets, but 2025 will bring its share of opportunities and challenges. The key to navigating it successfully is staying informed, staying diversified, and keeping a close eye on policy changes. Thank you for joining me today on this week's Financial Flash. If you have questions or want to learn more, feel free to reach out to our team at Styles Financial Services. Until next time, take care and stay invested.
Financial Flash is created by the experts at Styles Financial Services, creating customized portfolios that fit your unique lifestyle and goals.